This entire sector just crashed 20% in 3 months, and that pullback might be the best buying signal you'll see all year. I'm Alex Carter. Welcome back to Wealth Signal. Quick note before we dive in, everything here is for education, not personal investment advice. Always do your own research. Rare earth stocks were some of the hottest names in the market last year. Defense systems, AI infrastructure, electric vehicles. All of it runs through 17 specific metals most people can't even name. Then, 2026 happened. Prices spiked, headlines multiplied, and then the whole sector rolled over. Some of these stocks are now down over 20% from their highs, and investors are asking the obvious question: is this the end of the story, or the entry point everyone's been waiting for? Here's the part most headlines skip. Rare earth metals aren't actually rare in the ground. The US, Canada, and Australia all have real deposits. The true bottleneck has always been refining, turning raw ore into a form these industries can actually use. And China spent decades building that infrastructure almost by itself. That's the entire reason the US government has been pouring money into a domestic refining supply chain, and it's the backbone of why this is a multi-year story, not a trade you catch and forget. I spent time going through 3 exchange-traded funds that give you exposure to this sector without betting everything on one ticker. Each one is built completely differently. One is a pure direct play on mining and refining, one leans toward the companies actually using these metals, and one goes broader still, pulling in adjacent critical materials like uranium. We're going to rank all 3 by the end, and I'll tell you now, the order might surprise you. Quick reminder, if breakdowns like this are useful to you, hit that subscribe button, because we're covering this space regularly. Most investors assume the best way to play a booming sector is to spread your bets across dozens of stocks. The REMX fund does the opposite. This is the Van Eck Rare Earth and Strategic Metals ETF, and it holds just 38 companies, far fewer than most sector funds carry. That's not a weakness, it's the whole point. Every single holding here is directly tied to mining, refining, or recycling rare earth and strategic minerals, with no unrelated names padding out the fund. The fund currently manages around $2.4 billion in assets, with Albemarle sitting as the top holding at roughly 7.2% of the portfolio. The expense ratio runs at 0.58%, not cheap, but in line with what you'd expect for a specialized fund like this. Over the past 12 months, REMX is still up more than 65%, even after a sharp 3-month pullback of around 22%. Here's what concerns some investors. A 22% drop in 3 months sounds brutal, and it's fair to ask whether there's more room to fall. But look closer. Even after that pullback, the fund is still trading right around the middle of its 52-week range. That's not a broken chart. That's a sector that got ahead of itself and is now resetting. If you believe rare earth refining is genuinely moving onshore over the next several years, and the government money behind it suggests real commitment, then a fund trading mid-range after a sharp reset isn't a red flag. It's closer to an entry point than a warning sign. The volatility isn't going away, so this only works if you can stomach the swings. Now, if concentrated exposure like that feels too intense, the next fund takes a completely different approach. Think about the last time you charged an EV, read about a radar-guided defense system, or watched a robotics demo online. Somewhere behind every one of those things sits a rare earth metal you've probably never heard of. That's exactly the angle behind the Global X Rare Earth and Critical Materials ETF. The ticker is EART. The word earth, just missing the H. Instead of chasing the mining and refining side, this fund leans into the companies building the actual applications: EVs, energy storage, robotics, radar systems. EART holds about 50 companies, roughly $50 million in assets under management, and an expense ratio of 0.59%, almost identical to REMX. Top names include Freeport-McMoRan, Southern Copper, Albemarle again, and MP Materials, one of the more direct rare earth plays in the fund. No single holding carries more than 5% of the portfolio. Anglo-American plc leads at that ceiling. The trade-off here is obvious once you see the numbers. With 50 holdings and a 5% cap on any single name, you're giving up some of the upside concentration that REMX offers. Critics would call that a ceiling on how much this fund can really move. But that's usually the point of choosing an ETF in the first place. You're not trying to maximize the swing. You're trying to own the theme without one bad pick sinking your position. Picture two investors a year from now. One bet everything on a single rare earth miner and either got lucky or didn't. The other owns EART, spread across 50 companies actually building the products this sector depends on. Neither one escapes the sector's volatility completely. This fund is still up roughly 50% over the past year, despite the same 20% pullback everyone else took. But one of those investors sleeps a lot better at night. So far, we've gone from concentrated to diversified. The third fund pushes that even further. What happens when a fund stops asking which rare earth miner is best and starts asking, what does the entire critical materials supply chain look like? That's the Sprott Critical Materials ETF, ticker SETM. This isn't just rare earths anymore. Some of the largest positions here are uranium companies, a sector we've covered extensively on its own. SETM treats rare earths as one piece of a much bigger critical materials story, not the whole picture. This is by far the most diversified of the three, holding anywhere from 125 to 170 companies, depending on the period. Assets under management sit around $541 million, with a higher expense ratio of 0.65% to match the complexity of managing that broad a basket. You'd expect a fund this spread out to move differently from the other two, smoother, maybe duller. It doesn't. SETM is up somewhere between 50 and 60% over the past year and down around 20% over the last 3 months, almost identical to REMX and EART, despite holding 4 times as many companies. The sector-wide reset didn't spare anyone, no matter how diversified the fund. That similarity matters. It tells you this isn't a story about one overhyped stock getting punished. It's a structural pullback across an entire theme: rare earths, uranium, and everything adjacent to it. If you want exposure to critical materials broadly, without picking which subsector wins, SETM is built exactly for that job, at the cost of a slightly heavier fee. If you're finding this breakdown useful, drop a comment telling me which of these 3 you'd actually put money into. I read every one. Before we move on, everything I've referenced visually in this video is saved as a downloadable summary file in our Wealth Signal Telegram channel, along with every past and future videos file. Links in the description. Go grab it. So how do these 3 stack up against each other? If I had to rank them by risk-adjusted fit for most investors, I'd put SETM third. Solid and diversified, but the higher fee and heavy uranium tilt make it a slightly different bet than a pure rare earth play. Second, EART. Broad enough to feel safe, focused enough to stay tied to the actual theme. And first, REMX. The most direct, most concentrated way to bet on this specific story, if you can handle the volatility that comes with it. Here's the thing about pullbacks like this one. The stocks got ahead of the story in 2025, and 2026 has been the market correcting that excess. That doesn't mean the underlying thesis is broken. Defense systems, AI infrastructure, EVs. None of that stops needing these metals just because the stocks cooled off. The question was never whether this sector matters. It's whether you're comfortable riding out the volatility to get exposure to it. If you want more breakdowns like this, sector deep dives, ETF comparisons, real numbers instead of hype, hit subscribe. And if you want the visual summary file for this video, join the Wealth Signal Telegram channel. Link is in the description. I'm Alex Carter, and I'll see you in the next one.